Hey guys, it's Greeny here. Here's a really quick tutorial on EMAs and MAs, which are moving averages or exponential moving averages. The difference between them is that a moving average is a statistic that captures the average change in data over a series of period of time, whereas an EMA is obviously a technical indicator used in trading practices that show how price of an asset or security changes over a certain period of time. And obviously, therefore, the difference is that the EMA, so the exponential moving average, gives a higher weighting to recent prices. So the simple moving averages assigns an equal weight to all values over the period of time. So depending on how you like to trade, it's always good to consider both of them. They are lagging indicators compared to other indicators that you can use in this space, but they are super reliable in terms of understanding where price most likely could bounce, or if they are going over the top of one another, then it often can potentially lead into some potential reversals, whether that's from a bear market to a bull market or from a bull market to a bear market. So the most common one that you'll see in crypto is obviously the bull market support band. So if we have a quick look at its settings, you can see here that it's 1 week, okay? It's the 20-week SMA and the 21 EMA. Essentially, that's just showing you here. Essentially, what it means is that over a period of time, if Bitcoin respects these levels, then often we can consider that it's in a bull market. As soon as it breaks these levels, then it's often considered that Bitcoin is in a bear market. And as you can see here, last cycle it dropped 40% as soon as it didn't hold that particular EMA and SMA. So SMA just another term for MA, guys, as a moving average. But as you can see here, generally speaking, if it respects these levels, then we can consider that prices is going to bounce from these levels and continue higher. So the bull market support band is always one that I like to check in from time to time, just to see how far away we are from it, and then also where the price is going to bounce. So really interestingly, we moved so far away from here, guys. Like, that is probably one of the longest times that we have spent away at, compared to really last cycle. So quite a long distance. And often what happens here, guys, is that price has to consolidate, or it has to dump towards here to show that it can support these levels. So it's currently no surprise that we are obviously experiencing those sorts of pullbacks right now. Okay, so perhaps we might get price move up here like this as the bull market support band. It bounces off here and continues higher later this year up towards that 100k sort of zone, or we just consider that price doesn't do that and it actually keeps moving in that support of trend, so that bullish trend as it continues up. As you can see here, price didn't actually touch it, but I would classify this as keeping market structure. So we saw the bulls take over, continue this price action up. It's not until over on the side here where you look over on the side where it breaks, and it broke it here as well, and then retested. So we went down, retested it, couldn't break back above it, and instead what we did is we bounced back down. So that shows me that the bull market is certainly over. So moving averages and EMAs are really easy to use just to sort of track on a macro. Again, I'm a very macro sort of based trader, and essentially what you're looking at is whether these zones can be upheld. So the other ones you can obviously use is EMA. So for me, it's a moving average exponential, so EMA. You just click on that, guys, and you can add it over on the side. Then when you click on it and come into the actual EMA, you can click the settings, or you can double click it here. You can obviously change your lines. You can add multiple in there. A lot of people like to use the 9, the 20 week, the 50 week to sort of gauge how the market's going. But it just shows you where you could potentially see some bounces on particular time frames. So as you can see here, the week we are expecting a potential break there. As you can see here, the 9 EMA is currently being this is bearish, right, on this time frame. So this is the 4 hourly. So it's always good to consider all of these and change your EMAs over just to make sure that you can see what price is actually doing. So as you can see here, it respected it for quite a while. It then broke down, it then broke back in, support, support, support. So that's obviously bullish there. But right now, guys, what you can see is that we are rejecting from that level. So in other words, until price sort of flips back in and then holds that sort of EMA like that, that's maybe where we might see Bitcoin continue higher in the coming weeks. So EMA is a great tool to be using. For me, it's a lagging indicator. I don't refer to it that often. The only one that I do refer to is the bull market support band on several different time frames, just to see sort of how the market is moving with respect to these moving averages. And as you can see here, we haven't retested it in such a long time, not till October last year. So consolidation, the further you get away from something like this, okay, so as you can see here, it's quite a long way away. The further you get away, more often than not, we either consolidate sideways as this moves up like this, okay, or we come back down, okay, towards it to make sure that we are sort of respecting that. And then as soon as it breaks, guys, is when, so say for example, I'm not saying this is the end of the bull market, but say it was to break these levels, confirm this, and then head back down. For me, that's the top of the bull cycle there, guys. So that's some little bit of knowledge around how I use the bull market support band in particular, which you can, as an indicator, you can just search in here as well. So it's just bull market support band right there, bang. Favorite it so you can keep it. It's the ZK Dev one, and you can use that to trade. And that's the only really sort of EMA slash MA that I like to use at the moment. Let me know if you have any questions. I'm more than happy to help you out.